Hello students, hope you will like and understand the content of this video. If you have got any query, please send it through the comment box. If you like smart lectures, please subscribe, follow, like, comment and share our channel. Thank you very much.
Suppose Rahul is looking for 100,000 rupees to start the business, and he is looking for 10,000 investors who can invest 10 rupees each in his company. For this thing, he has to give the message to the general public. Naturally, he will have to make some advertisement, etc., so that the people can know that this company is looking for investors. Technically speaking, this advertisement is called prospectus. First of all, he will have to send a copy of the prospectus to the ROC. If the ROC is satisfied with the prospectus that it has no misleading information to the general public, the ROC will approve the prospectus. After the approval of the prospectus, now the problem arises: who will look after the receipts of the money for the capital? For this thing, he will have to engage some financial institute or some bank who can look after the receipts of the capital. Technically speaking, this financial institute or bank is called issue manager. Suppose he is satisfied with the services of State Bank of India. He goes to State Bank of India and engages them as their issue manager. Before that, he will have to set the dates during which he would like to collect money. Suppose he has already decided that the money will be collected from 1st of January to the 10th of January. Technically speaking, the issue opens on 1st of January and closes on 10th of January. Not before that, not after that. Now, suppose you want to apply for the investment in this company. Just go to State Bank of India and you will find one big box there and application forms. Fill up the application forms, give your details like your name, address, amount of investment or check details, etc., and attach the check and drop the application form in the box. In this way, he will collect the money, and we assume that during this period, exactly 10,000 people came to the bank and attached the check of rupees 10 each. And in this way, Rahul collected exactly 100,000 rupees, and this money was deposited in the bank account of the company. And all the application forms will go to Rahul. So, in this way, Rahul has got all the details of the investors. This application form is called share application form. And after that, Rahul will send the certificate to all the investors for the confirmation that their money has been received for the investment in the capital, and this certificate is called shares certificate. So you know, 10,000 people invested in the company as capital. These investors are called shareholders. Now, one thing more I would like to tell you, that Rahul conceived the idea of the company and he made all the efforts to establish the company. Naturally, he must have spent a lot of money like government duties, fee to the chartered accountant or advocate, etc., etc. All these expenses incurred before the certificate of incorporation are called preliminary expenses, and the person who conceives the idea of establishing the company is called promoter. In our story, Rahul is the promoter of the company. Suppose Rahul has spent about 10,000 rupees in the company as preliminary expenses, and this money he will recover after he receives the money from the shareholders. Now the problem is, you must be thinking who will handle the business. I mean, day-to-day activities of the business. Actually, each and every shareholder will be given the opportunity to attend the meeting every year in the company. And this meeting is called Annual General Meeting. And in this Annual General Meeting, shareholders elect their directors. And these directors manage the business of the company. And the group of directors is called Board of Directors. They will take all the decisions about the company in future. So in this way, the company is managed by the directors. And one thing more, when the directors take the decision in the company, technically speaking, the resolution is passed, which means decision has been made. There are two types of decisions, ordinary decision and special decision, which are called ordinary resolution and special resolution. So in this story, you must have learned new terms and concepts about the company.